The first is that we are deeply vulnerable to energy prices. So we have we import 50% of our dense energy, whether it is in the form of oil or gas or fertilizer, edible oil. I think all of that exposure is very vulnerable at this stage. Every dollar per barrel is about $1.8 billion a year. So if you take in, say, a $50 increase in oil prices, we are talking about $90 billion of impact. So that's like more than 2% of GDP if oil prices stay here for 1 year. That means a significant distortion or disruption in the balance of payments. So there is now suddenly, if you have to pay $90 billion extra, suppose that it's only a $50 rise. I mean, it is quite possible as the stress builds up that these numbers can actually go higher from here. The oil prices, there is no denying that they can, in the near term, even going even higher from here. The question to ask is whether this will last for a year or will this last for a month. And I think the call there is that this is not just painful for India, it is actually painful for everyone, including the people who are involved in these battles. It is as much a problem for the West Asian oil producers whose oil is not able to come to the market, as it is for America, where there are midterm elections which are due later this year, and a number of the core support base of the American president actually have warned against these wars and getting involved in them. So it is reasonable to expect that this will be a short-lived war, that because it's not in China's interest, it's not in American interest. So this is the game of brinkmanship that will play out for a couple of weeks, maybe another 4 or 5 weeks, maybe 6 weeks. But it is, I think, a reasonable expectation that by end of April we see some kind of conclusion here, because stress is building up on both sides, and wars only continue till the time that one side can withstand it.
Impact on CPI, sir?
In a 2-month increase in oil prices, the impact will be quite moderate. If you have, see, about 50% of our oil demand is for fuel, and 50% is non-fuel. The fuel side, the government, because OMC are sitting on big buffers. For a long time, the oil prices were low, but the fuel prices at the pump had not changed. But now we have seen that these mosquitoes are an embarrassment. So there are some buffers there. For a few months, I think they can withstand that. So these prices may not flow through into retail prices of fuel. If this lasts longer, of course, then of course there are bigger implications. But for the remaining 50, I think there will be some impact, depending on what is the average price of oil and how long it lasts. It could be 30, 40, 50 basis points on the CPI side. Thankfully, that's not the primary issue that should bother the markets at this stage. I would say that the terms of trade, the cost of energy, and the potential volatility on the rupee side is what I think will worry the markets. If you are a foreign institutional investor, at this stage there is de-risking happening everywhere, and after the first phase of active de-risking, or I'd say in general de-risking, now they are starting to reward oil producers, penalize oil consumers. So from that, India stands to be on the losing side. But I would repeat that the only thing that matters is how long this conflict lasts. I don't think it will last more than 6 to 8 weeks.
Will RBI need to recalibrate its policy, especially interest rates?
Not so soon, because this is not something that warrants. So again, it is the strategic call. I think the government and the RBI have to collectively decide what we are preparing for. Are we preparing for a 6 to 8 week conflict or a 1 year long conflict? If it's a 1 year long conflict, then I think monetary policy action is required.
So do you see any impact on remittances?
Again, if it's a short term thing, it actually should not impact remittances, because if it's 6 to 8 weeks, even the cuts to salary or incomes for some of these workers outside should not be affected. If it lasts longer, then there is definitely an impact.
So, there are reports which says that India has a crude oil deposits of around 25 days.
Reserves,
yeah, almost like 25 days, and the gas reserves is much lower. Considering the fact that there are reports which also say that the war can last over 6 months, and all.
Yeah. So that's why if it lasts over 6 months, then there are then emergency measures that need to be taken to reduce energy demand and all that. But that's not my base case. My base case is within 6 to 8 weeks, because remember, we are not the only country that is getting stressed by this. There are countries whose oil is not coming to the market, and this is like 80-90% of their incomes. So there is only so much that they can absorb in terms of pain. The country that is being bombarded also has its own limits on how long it can withstand it. The countries that are involved in this, who have started the war, also have a certain pain threshold for the level of oil price and how long it can last there. Because fuel prices at the pump in the US are a very severe political problem. So which is why I think, while it is fine for people to throw out these kind of numbers, but I doubt this lasts more than 6 to 8 weeks.
If you like the video, do like, comment, share and subscribe.